Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about the Euro US dollar. It did close below that 20-day moving average on Sunday, and then it followed up with another decline. So again, this is just a continuation of the negative events that started unfolding on Friday. Friday was just a profit-taking day, and Sunday followed up with some serious losses. We continue those losses, and we have basically fallen by a couple hundred pips on the Euro US dollar. It seems to me that the Euro US dollar isn't really, I guess investors aren't feeling that secure. I guess what's happening right now is that people really don't want to be buyers, but rather they want to be sellers of the euro. And the main reason why this happens is because, again, it's very simple. Macroeconomics. We expect inflationary policy out of Europe soon, and if there is not enough inflation in Europe, what's going to happen is hyperdeflation. In either case scenario, we would much rather hold a dollar in a hyperdeflationary scenario, mainly because we anticipate the fact that, again, deflation would only apply in terms of consumer price indices. It does not have anything to do with the fact that if we do own the euro, oh, maybe the euro will appreciate against the dollar. That's what you would think, right? But the answer is not necessarily so, because what would happen is that people would evacuate their euros from the eurozone and repatriate the money back to whatever country it came from, and that's what would have a negative impact on the euro. And that's the short-term implications. The second implication is a longer-term implication of monetary policy. Now, the monetary policy is going to require that a lot of inflation were to take place, and a lot of excessive borrowing will take place. This will both devaluate the euro, and also, because it is borrowing money, because the government does have to borrow money into existence, technically speaking, what would happen is, not only would this trigger an inflationary set of events, it would also harm whether, it really comes to question as to whether or not these euro economic zones will be really sustainable. And again, and the fiscal policy that goes into that, it would only perpetuate the negative momentum going forward. So there's no real easy solution here when it comes to Europe. And because there is no real easy solution, the euro is being sold, and it's being sold really hard. No matter how many descriptions we come up with to solve what's wrong with the euro or the European Union, it really comes across as ambiguous and not something that can be really applicable to the situation at hand. So again, that does it for me. I mean, I think the euro is in a much longer term downtrend. We have a lot of macroeconomic issues to smooth over, but the main point here, I guess, and the main takeaway is that the euro will undergo inflationary policy, and the value of the euro will most likely continue to fall against the US dollar.